Gold doesn't interest me. It's not worth the money. If you buy it, it might be a way to show that you're good. Before World War I, gold stopped being a good way to store value. All of these countries took their money off the gold standard before they joined the First World War. So people like to hold on to the idea of a gold standard. But I've read about the history of money for 3,000 years. From what I can tell, it was never as good as people said it was. It has always been broken. Two things are the real big problems here. Gold doesn't work in space or time. Michael's study of gold opens my eyes. Gold has been thought of as a safe haven in the past, but as he says, it has major flaws. During World War I, countries gave up on the gold standard, which showed how weak it was. Even though gold seems stable, it has never been as solid as many people thought it was, failing in time and space. These days, when everything is digital, gold's flaws are even more obvious. Gold is hard to move around the world because it is physical, and its 2% yearly inflation rate makes it much less valuable over time. Bitcoin, on the other hand, does better than gold because it is independent and digital. If you want to use gold as a feature, there is no way for 1,000 different organizations to store their gold, trade it every week, and settle the balance in space. Gold is just a commodity. You can't always be happy. You can't settle every week. You can't even keep it safe, so gold spreads out. How could the US take the Russians' gold? I guess the fake gold standard that was set up after Bretton Woods fell apart when the French wanted their gold back. But you would need to let people settle their own debts with each other for it to work as a good space bank asset. I will only talk about Apple, Google, JP Morgan, Citigroup, Bank of Japan, and Bank of Switzerland when I talk about peers. What about the 10,000 biggest businesses in the world? It can't be a solid settlement network until they can all hold it and trade it every month. Gold isn't that, of course. It's not something you can sell every day. It's not moving fast enough. That's why it doesn't work against Bitcoin. With Bitcoin, there could be 10,000 different managers, and every day they could settle $100 million or $1 billion worth of transactions between them. The network could handle that much traffic. Gold doesn't work in time or space then. Gold has a 2% inflation rate even when things are going well. That's a steady state. With a 2% inflation rate, gold has a half-life of 30 years. This means that over 100 years, 87% to 88% of your income is lost. If you look at Spain in the 1600s and the 100 years after they found America, they stole gold from the Aztecs, the Incas, and everyone else. They also caused prices to rise by 500%. They actually inflated their gold coins too much, which brought down their kingdom. So gold causes prices to rise. There are a billion years between 2% and 0%, which is 30 years. That's all there is to it. Bitcoin is the gold standard. Since gold is too slow and causes too much inflation, it is not a good treasury instrument in and of itself. Let's go back to words. Everyone wants to argue about a word, so let's break down the word money. What does money mean? A traditional economist says that money is a way to buy and sell things, keep track of money, and store value. What does that mean? It turns out that the peso is the main currency in Argentina. The dollar is used as the unit of account. The value store is neither. There isn't a smart person in America who thinks the US dollar is a good deal. There would be a billionaire who would say that 95% of their money is in dollar cash accounts if it were true. No one is either. The source of value is something else which everyone knows. Or it could be the SP index. It could be a house on Park Avenue. It could be a sports team. We had a war in 1914. The war was paid for with loans. It turns out that the US government bought a lot of us bonds and the Bank of England bought a lot of war bonds. We took out a lot of loans. The debt was bought by the government. After the war, prices went up. In New York before the war, there's a saying, they might be talking about World War II, but in general, pre-war means before the war, which means we had good things and made really nice buildings. Then, for some reason, we dropped our standards after the war. Before the war, an acre of land in Miami Beach cost $10,000. It's $10 million now. Will the government fall apart then? Not at all. Will the value of the coin drop? It'll just keep going down. What do you call something where the dollar is worth 0.1% of what it was 100 years ago? We are still there though, right? The value of the currency will go down, but smart people will switch their savings to something else. And if you were rich in the 20th century, property like a house or land was the best way to keep your money safe. And if you were middle class, it might have been a collection of different stocks. The Vanguard 500 or the SP 500 became the most important capital asset, and it set the cost of capital for most businesses and institutions. In that case, I believe Bitcoin is money, but it's money that can be used to store value. I believe that strong governments will keep printing money. They will make it official money. If your country or nation never works again, like El Salvador after the Civil War or Nigeria or some parts of Africa, you won't have a currency. That's fine. You will use someone else's money, whether it's a CFA, the euro, the CNY, or the USD. People who are smart and sensible will use the local currency as a way to buy things. This is how I think the world should be thought about going forward. As their middle-level unit of account, they will use the world reserve currency. Most likely the dollar, unless you're in an area where China has a lot of power. In that case, it could be the CNY. If they're a standard investor, which is about 99% of the money in the world, they'll either keep their money in the SP index or buy high-end real estate in the Hamptons, New York, or Miami. Bonds aren't even seen as a way to save money by most rich people. A study by JP Morgan of family offices found that 45% of their money is in alternative assets. This is what most people think. So, traditional investors will use alternative assets, such as stock or real estate portfolios. Every once in a while, if they're lucky, they'll get collectibles like Picassos or jets. Next, new players, digital investors of the 21st century, will look at that and add Bitcoin to it. As you can see, I think Bitcoin is by far the best way to own property, and it's also the best way to own digital property. I also think that a capital item is the best way to think about it. That's why I see it as digital wealth. The stock markets will change because of it. Why is it a little better than real estate? This word makes me think of a digital warehouse or building worth $1 billion or $100 million. But most people don't know that buildings can break down and be teleported. But cash needs to be easy to get, just like treasury assets. You can use Bitcoin as a financial asset if you have $1 billion in the bank and can sell 1% of it every day. This means that I can buy $1 million worth of property or sell $8 million worth of property as a business. 4 buildings are not easy for a business to use as financial assets. Aside from that, I guess you would refinance the building, change how much debt it has, and use the dollar as your currency there. In that case, you would use the dollar as your money, right?